Hi there, traders. This is Brad Gilbert with today's trading action. All right, now just looking at the major currency pairs here, plus the dollar index. You can see the dollar index is just stalled right up around 106. Dollar Swiss also stalling with still got a very strong upward bias, both dollar Swiss and dollar yen, right? So they're the two sort of standout pairs, the safe haven pairs. Just keep an eye on those. Any change in the whole unrest situation may see a bit of an unwind. Dollar yen's got its hands full with crazy BOJ policy, etc. Now, the pairs down the bottom here, like euro, okay, particularly the Aussie and Kiwi, have really sort of stalled, trading sideways. Whereas I think the pressure on the downside here in sterling, we've seen a bit of a stop loss run there through just under 123.50. It's probably keeping these other pairs deflated, right? And there usually is one pair that sort of starts the move, right? To me, you know, it looks like dollar CAD is the $1 pair that is not doing as it should compared to the rest of the other instruments, right? But you know what? And I'll be really keen to get into it because it's just broken down through support. But if we have a close look at this, the dollar CAD is sort of having a bit of a clean out to the downside. But also oil has fallen back to 82 bucks. You can see it sort of jump up to this level here. Now that's oil going up. That usually means, oil going down. That usually means dollar CAD going up or supporting an upward bias in dollar CAD, right? So there's a bit of a mismatch there between the CAD and oil. And that can sometimes mess the whole trade up. So if I don't like it 100% or into the 85, 90% range, I'll sort of leave it alone, but I will keep an eye on it. Now, the way like euro, this is one of those things, right? We've got to think objectively about what's happening. Strong dollar is in place across the board, right? But if we see a little shift in sentiment here, say a little shift in the euro, like get some positive numbers out of these German manufacturing PMI numbers, we'll start to see a squeeze, a short squeeze to the top side. Now, if you don't know what that is, jump on the Financial Markets Trading Masterclass course and you'll find what I'm talking about with regards to short squeeze. There's a lot of room up here to that previous level that was support. Now, that's going to act as resistance on the way back up, but the real resistance level is up here around 108.40. So today, what am I thinking? Well, I'm looking for one of two things. Slightly stronger German numbers and slightly weaker S&P manufacturing numbers out of the US as well. That'll be a double whammy, and we'll definitely see it up here around 107.60. Now, you know what? I don't want to be kidding myself because all the US numbers have been strong, but the market is set up for a shift back in the range, right? That opens up opportunities here on potentially sterling. We've got some sterling manufacturing PMI numbers as well. Depends how they come out as well, right? If we get stronger German, UK numbers, we're going to start to see a shift to the top side. And then later on, if we get even the home sales numbers out of the US and S&P global manufacturing numbers, right? We might see, if they're weaker, we will see Euro, Sterling, Aussie, Kiwi bounce to the top side. And you'll see the dollar index drift lower. Dollar yen and dollar Swiss, well, you know what? They're doing their own thing. And dollar CAD, it's caught up between the dollar move, right? Dollar drifting lower against the CAD or a stronger CAD at the moment with a weaker oil. That sort of clouds the picture there as well. So to me, the bottom pairs look best. Now, the other side of the equation, if we get, say, weaker German numbers, because there's an opportunity both sides here. And that's because we've got this last level of support around 106, just above 106 on euro. We get weaker German numbers. Well, obviously, we're going to test that level. We get stronger US numbers. We'll punch through it and you'll have a trade to the downside, right? So to me, that's where it is. And what am I talking about? Well, when I'm talking about these numbers, this is it, right? You've got the manufacturing numbers out of Germany, very important. It's backed up with the Eurozone manufacturing numbers. But really, Germany is the key to Europe, right? So I follow the German numbers a lot closer. Then we've got the manufacturing and services PMI numbers out of the UK, right? These are all good numbers because they're sort of second tier, potentially even slightly third tier sometimes but we're looking at the underbelly of the market now, and traders are gagging for like what's happening. And as I mentioned yesterday, sentiment with regards what the Fed are doing in central banks, it's on a knife edge. So it's changing very quickly. That's why we're getting the volatility on a lot of these releases. And last but not least, you've got the S&P manufacturing numbers in the US and the new home sales, right? So the European North American sessions today, plenty of time to get some trading on board. And whilst you're doing that, make sure you keep an eye on the core markets, okay? And what I'm talking about is see if there's a clear connection with the overall markets, right? So at the moment, we've got a risk off profile as we come into the Asian session on the equity markets. Is that flowing through onto the currencies? Well, not really, because the dollar appears to be going down against most other things. So bit of a mismatch. The US bond yields prices are up, which means the yields are lower, which suggests a lower dollar. That matches up with what's happening down here on the currencies. So a bit of a disconnection between the equities and the currencies. But you know what? That's pretty common in the Asian session. So when you are looking at opportunities, if you've got meta stock, get this up. It'll confirm to you what's happening in the market. Then you can come back, simply overlay the data, right? The numbers that are coming out, and you're looking for, we're looking for sort of clear indications of what's going on, and then it can translate to your charts. Now, the biggest thing I think, like there's an easy trade to the downside here if we do get weaker German, say weaker UK and stronger US numbers. Yeah, down through 106, you could potentially just selling it at market because it's just going to drift. But if we get the stronger numbers, it's against the general sentiment that we've seen recently. There's a lot of room between where the market is at 106.60 and up to 108.40. There's a lot of room for a nice short squeeze over the next couple of days, right? That's what I can see. And you know what? You scroll down through the numbers, you start to look into Wednesday. Then we start to get some, that's when the lumpier numbers are coming out. Aussie inflation numbers, German IFO business numbers, Canadian retail sales, durable goods. You start to see where the connection comes in. Today's one of those transition days ahead of the big releases, and it may give us a trading opportunity or may give us a lead into Wednesday's trading, right? Connect the dots, manage your capital. Good luck. All the best. Cheerio.